Now, ladies and gentlemen, my fellow traders, in this short presentation, I will teach you how to do comparative analysis, options versus shares. Okay, there's a lot of major difference between shares and options. Options is a derivative of shares, therefore must cost less than shares. So why we use options? Because we want to use options because objective exercise is to minimize capital risk without using stop loss. Okay, so I mean by that, why don't we look at our good friend Alibaba, for example. Alibaba, you feel that you think now Alibaba is a value company, you want to do a bullish trade for Alibaba for 6 months. After all, you feel that you believe Alibaba it will be go up because Alibaba fundamentally, economically is a sound company. So how do I do a directional trade? I do a 6 month long trade using shares versus using options. So as a good trader, a 6 month trade, you are a good trader. When you buy a shares, you always put a stop loss. We can put many different stop loss. We can use standard deviation in chart pattern. For our discussion purpose, we are going to use a 30 days. We are going to use a 30 days low. Means what? That means that if I go and enter buy 100 shares of Alibaba shares, I will use a 30 days low to determine my where is what level cut. So for this level we look at now, I intend to cut loss at $76 level. $76 happen with 30 days. If you are more conservative, then your cut loss level should be at a 3 months, 3 to 4 months, 3 to 6 months low. Then your level should be cut loss at what? Which should cut loss at $73 level. Around here. So now, as a trader, you enter a trade and you use a 1 month cut loss level to consider a cut loss. The current market price now is $93. We count $93 round up numbers, and your cut loss level we run out to 76. So basically, I enter a trade, buy 100 shares at $93. Therefore, I prepare to stand by to cut loss, not stop loss. Stand by to cut loss at $73 level. So technically speaking, your what you call your cut loss budget or your cut loss projected cut loss value is $93. $93 minus $76. So it's roughly how much? Is $17. So you can buy 100 shares and put drop $17 to $76 a 3 months a 1 month low, and you prepare to cut loss. Okay, so basically you prepare to cut loss at how much? A nice sum of, let me see, not very much. So you're prepared to cut loss at $17. So it means you prepare to lose $17 for this trade. All this number can be predetermined by you before you will enter a trade, because this number in this case is based on chart, support, chart pattern, support, resistance line. We can use standard deviation, Bollinger Band, and all other reference number. So next, so we know that we are prepared to do a cut loss at $17 level. Give a minute. So we got two choices to do trade. One trade is what? One trade is to buy the shares. Nothing wrong with buying the shares. Okay? Oh, since your trade is going to be what? How many days? Your trade is going to be 6 months long, right? So we what? So we go and buy how many days? We go and buy December 2020, 6.5 months long options. Thomas, I mean, why you do that? Because then from there, our cut loss, what's the cut loss value? Our cut loss capital is $17. So we are looking to buy an option trade to replace your 100 shares. So you are prepared to lose $17, correct? Okay. So okay, let's go look at January 23. Okay, for $17, we can buy up to March 2023. Cannot? Yes. This one you can see the normal pricing, but I think this is technically a glitch. Okay, if you don't believe me, very easy to solve one. You just simply go to last X can already. Last X is $17.70. So anyway, we don't want. So we go and do a trade by 20 January 2023. So this trade is what, 7 months, more than 7 months long. Right click here. Instead of buying 100 shares and put a stop loss, you can take the your stop loss, cut loss $17, go and buy a straight call at $95. Means what? A straight this option here give you the right to buy Alibaba shares at $95. Will cost, worst case, how much you lose? Maximum total Alibaba go bankrupt or Alibaba got delisted for due to geopolitical reasons. Your worst case you lose is $1,570. But your 30 days cut loss is $17, $1,700 cut loss. Okay, of course, Thomas, I can go and buy the shares. Okay, let's say, okay, I'm 100 shares here. Okay, click here. So you buy 100 shares here. Okay, see now, will cost you how much? Will cost you $9,320. Thomas, buying power effect only $2,800. Stop. Your buying power effect, if your account size is $2,300, you will not be able to buy 100 shares. The buying power is just a deposit, but for you to do, you cannot be buying $3,000 to go buy 100 shares. Your broker by right should not let you. Okay, so you got two choices: buy the shares at $9,320 and put a cut loss at $63. Is it $67? Correct. Cut loss at $67, or go and buy options. Which one better? Depends on your objective. If you are in buying Alibaba share for bottom fishing, long-term investing, you want to buy for next 5 years, 10-year cycle, or for your grandchildren education funds, you believe Alibaba, okay? Nothing wrong, buy the shares. But as a trader, which one more efficient? Spend $9,320 to open one position, bullish position using 100 shares, or buy one options for $1,570. Up to your discretion. Thomas, you say you can say 100% return. Yes. For you to be 100% return, Alibaba need to go up to how much? For you to double your money, Alibaba need to go up to approximately $125 for 100% return. For you to double your 100% return using shares, Alibaba need to go up to $186. Correct. I know. For you to double your money, the share value must double. Common sense. Options, you don't need double. Okay. If your 95 call is in the money by $30 or $31, you guarantee you will have more than double your money. Okay. So which one easier to double your money? Which one have less capital needed? Therefore, between a trade of $9,320 or a trade of $1,570, okay, which one have less risk? Thomas, time decay. Excuse me. It's a bit naive. Don't get me upset, irritated. Thank you, gentlemen. You can see now this trade, right? Thomas, I see every day is one. Your options, you buy the trade for this 230 days option, January 2023, is $15.70 divided by 230 days. The average time decay every day is under 7 cents a day. Miss that 7 cents a day. Thomas, it's 2 time decay leh. Okay, stop. Don't get me angry. Your time decay is never the risk. Market directionality is your risk. You can look at it here, ladies and gentlemen. Every day, based on standard deviation, or based on ATR simple or ATR 1 or ATR 10 or standard deviation 10, every day, Alibaba can move more than $5.20, $5.30, and you worry about how many cents time decay? me go check inside. How many times have you? Okay, let me check the let me see what the time decay. You worry about 7 cents time decay? What happened to this? Lost again. You worry about 7 cents time decay? You spend $15.70. Let me delete everything away. You spend $15.70. Okay? Divided by 230 days away. Every day, your time decay average only 7 cents a day. Daily price action value, whether it's based on ATR, standard deviation, or whatever, is $3 Which are more risky? 7 cents a time average time decay of 7 cents a day, or $3.30 directional move. Is nothing wrong. It's nothing wrong with, yes, time decay is an issue, but compared to directional risk, $3. You can lose $3 a day. One bad day, lose $3. And $3 is not a bad day. It's average for last 5 days, 10 days, 8 days. So what is the risk? Directional risk is your main concern. Time decay of 7 cents a day is not a level of concerns. So ladies and gentlemen, if you want to, don't listen to people talk. Okay, talk M. Okay? Be a thinking trader. Your risk is directional risk. Time decay is never the problem. If you want to know more, drop me a message. Options will definitely outwin shares for trading purpose. Of course, if you are doing 5 years, 10 years, 20 years investment cycle, then shares will win you. That will shares. Oh, Thomas, I want to do day trading, scalping. Then shares is better. Because okay, but if you want to do swing or positional or these trades how much? 230 days divided by 30 days. Hell, that means what? It's almost 7 months, 7 months and 3 weeks. Okay? So repeat again. Shares, maximize profit, maximize risk. Okay? Options, maximize profit, minimize risk, minimize capital risk. Thomas, share is better. Nope. Look carefully. You can see here options unlimited, infinite profit. So you don't tell me that options make less money. In fact, ladies and gentlemen, easier to double, triple, or quadruple your returns using options than you just shares. Okay, to be fair, for the same time frame. Of course, you compare 10-year cycle, we don't talk about it. We're talking about 6-month cycle, 5-month cycle. To double your money, triple your money, options is definitely superior. In fact, for this trade, January 230 days trade, 20 January 2022, I expect if the market is right in my favor, easily to make 4-5-6%. Okay. So any questions? Want to debate? Say share is better for trading. I don't argue with you. You think it's right? Put all your money inside, Market is great. Market is fair. Be quiet like now.